have the perfect entry, a textbook stop loss, and a strategy NASA would be proud of and still blow your account. Why? Because when fear shows up, your brain doesn't respond with logic. 1 minute you're following your plan, the next you're gambling, over trading, chasing, doubting, undoing days of discipline in minutes, like the market owes you rent money. The market isn't your biggest threat. It's your nervous system. It's that tiny voice that whispers, just double your lot size, what could go wrong? Welcome to the brutal truths behind every blown trade. You never learn how to manage your brain. Today, we are not talking about candlestick patterns or moving averages. We are talking about the psychology that makes or breaks every trade. Because mastering your mind isn't nice to have, it's the entire game. Let's rewind to the early 1900s. Back then, trading wasn't about discipline or psychology. It was more like, buy steel, hope Carnegie doesn't die. But even then, smart folks like Charles Dow and Jesse Livermore started noticing that price wasn't just about value. It was about human behavior, about fear, about greed. Then the 1970s came along and absolutely ruined the fantasy that humans are rational. Enter Kahneman and Tversky, two psychologists who basically says, hey guys, we have run the numbers and it turns out we are all just emotional raccoons with calculators. Their work gave birth to behavioral economics. It showed we are wired to make emotional mistakes. Even Nobel Prize level brains make money mistakes. Constantly, predictably, and often with total confidence. In the trading world, that kicked off what we now know as trading psychology. The idea that your emotional responses to risk, loss, and uncertainty are just as important as your technical skill. If you are ignoring that today, you are not just behind, you are unarmed in a market that punishes hesitation and reward emotional control. Let's talk research. And don't worry, I'll keep it spicy. First up, emotional regulation. Sounds like something your therapist says while handing you tissues, right? But according to a 2022 study from the Journal of Behavioral Finance, traders with higher emotional intelligence, those who can stay cool when their portfolio looks like it just went through a blender, get better returns. They don't panic sell. They don't YOLO long on meme stocks just because it's raining, and they are emotionally stable. They stay rational when the rest of the market is throwing a tantrum. Then there is overconfidence. Barber and Odean dropped a bomb in 2021 with data showing that the traders who were the most confident actually performed worse. That's right. The I got this crew ended up with fewer dollars and more therapy sessions. It's like overestimating your karaoke skills. Fun in the moment, but someone is always filming. And finally, mindfulness. Yep, we're talking breathing, awareness, and being present. Sounds soft, right? Like, namaste, your way to profit. And before you roll your eyes and say, I'm a trader, not a monk, hear this. A 2023 meta-analysis found mindfulness helped traders reduce impulsive decision under stress. So, maybe don't laugh at that guy meditating on the trading floor. He's probably outperforming you while humming. I also got to know, what's your personal emotional indicator? Is it the eye twitch before a bad entry? The snack binge after a losing streak? Or do you just stare at the chart hoping it will apologize? Let me know your telltale trading meltdown signs in the comments. Let's normalize being emotionally unwell, but in a statistically backtested way. And if you think this is just academic fluff, let's call in the big guns. Dr. Brad Steenbarger, the Gandalf of trading psychology, says, the greatest edge in trading is not found in the market, but in the mind of the trader. Translation? Your RSI can't save you if your brain is melting. Ray Dalio, that guy, built Bridgewater Associates, a literal empire on the back of radical transparency and psychological honesty. If you work for him and lie to yourself, you're not getting fired. You're getting a TED talk on what went wrong with your soul. And then there is Denishal. She works with elite traders and athletes, and she's out here saying, feelings are data. That's right. Your emotions aren't distraction. They are indicators. You are not supposed to delete your feelings. You are supposed to learn to read them. Like emotional candlesticks. That's right. I said it. This isn't theory. Big firms are putting their money where their mindset is. Goldman Sachs, JP Morgan, they are not just teaching traders how to scalp the S&P. They are putting them through emotional regulation training. Because even if you have got the best models in the world, if your trader can't handle a red candle without hyperventilating, you've got a problem. Retail platforms are in on it too. eToro, Robinhood, they are coding behavioral nudges into their apps. Like your app's becoming your emotional support buddy. You try to revenge trade and your phone's like, hey, Chen, maybe go hydrate instead. And coaching is exploding. Not to help you find the next breakout, but to help you stop spiraling after one. More traders now have mindset coaches than gym memberships. And it shows. Now let's travel. In the West, especially the United States, trading is often marketed like a gladiator sport. Fast, flashy, fueled by monster energy and hubris. But even here, cognitive behavioral strategies are gaining traction. We are finally realizing that yelling at your monitor doesn't count as a trading plan. Meanwhile, in Japan, trading culture leans more toward calm, discipline, and not spontaneously combusting during a pullback. There is respect for the rhythm of the market. Emotional composure isn't optional, it's expected. And what about robots? Algorithmic trading sounds like the solution, right? Let the machines handle it, no emotion, just clean code. Except humans wrote the code, and when volatility hits, guess who steps in and override the system? That's right, Steve from risk management, who just had his third espresso and think this time is different. There is no escape from psychology. It's like your shadow. If your shadow could whisper bad trade ideas and ruin your weekend. Okay, but seriously, have you ever manually overridden your trading plan and immediately regretted it? Like the market say, don't! And you said, let me just ruin my day real quick. Tell me your best, I knew better, but did it anyway moment. Come on. Therapy is expensive, but comment section are free. Let's bust a few myths. Myth number one, a perfect strategy is all we need. Wrong. Even the best strategy is just a set of instructions. But instructions don't help if your hand's shaking, your brain screaming, and you decided that doubling your precision during a losing streak is just a bold risk management. Myth number two, just build better risk system. Yes, do that, but also no, because a system is only as good as the person following it. And when your emotion override your rules, it's game over. The stop loss didn't fail. You did. Ouch, but real. Here's the truth. Trading isn't just technical, it's personal. Strategies are tools, but tools are useless in the hands of someone who panics every time they see red on the screen. You can't chart your way out of a mindset problem because when things go wrong, and they will, it's not your setup that will save you, it's your psychology. The voice that says, stick to the plan. The pose that keeps you from going full casino mode. The resilience that keeps showing up when nothing seems to work. Mastering your mind is no longer optional. It's the edge. It's the real alpha. And if you can build that internal foundation, no matter what the market throws at you, FOMC chaos, Elon tweets, flash crashes, you will stand firm because the ultimate trading system is you. Here's what we learned today. Besides the fact that caffeine and fear don't make a great trading combo. 1. Emotional intelligence isn't fluff, it's the performance fuel. 2. Your brain is biased by default. Don't trust it blindly. Train it. 3. Mindfulness is a technique. 4. Suppressing emotion just means they will come back later, usually louder and with bad financial decision. And 5. You are the asset. You are also the risk. Master yourself and you master the market. Alright, before you go revenge trading your self-esteem or doubling down on your delusion because the market owes you, let's wrap this up like a blown stop loss. Subscribe so you never confuse confidence with competence again. Share this with that one trader friend who think risk management is just positive vibes. And hey, buy me a coffee because without it, I trade like a squirrel on margin. And if you really felt this episode in your trading soul, come hang with us at starshipfx.com. Join our community, get a free trading journal, and even better, you won't have to fight this mindset game alone. Let's master the market by mastering you together.